Yes, hello guys, welcome back to the channel. It's Ranjo once more again. So today is more of a day in a life, trying to make a review of what I had for the week. So this week I took a number of trades, and in this video it's not like I'm here to show you that I took this trade and I took this trade and I made this amount of money this week. So the main reason to this video is to show you what I was looking out for, the mental barriers that I had like going throughout the day and as I was looking for the setups. So like I took a trade on Monday, Tuesday, I took a trade on Wednesday and Thursday, and I didn't trade on Friday. So on Monday I was looking for longs, and as I told you, it's not to show you what I made for the week, it's to show you what I was looking out for the setups that made me profitable, and also show you the mental barriers that I had throughout executing on my models. Okay, so on Monday I took a trade on Euro USD, and I took a trade from somewhere around here to this buy side liquidity. Now what I was looking out for is, as you can see, the market was kind of like bullish within this range, as you can see. So like what I used to take a trade from this range to this range, as you can see, let me show you the execution. So here's the execution. As you can see, I took a trade from this to this buy side liquidity, and immediately the market reached here, I closed the trade. So we had some measure of like a 4-hour bullish order block within this range, and the market was showing some measure of like bullishness. So once I saw this, it was kind of like a shift. We had a 4-hour bullish order block within this range, and also the market was leaving this 1-hour fair value gap, as you can see, this gap in here. So like it's a time where like I also executed before my actual entry time, because like normally I execute between 2 a.m. to 5 a.m. that's New York time. That's when I take my trades. But I went in earlier before that time, just because I knew that the market might not retrace, it might not give me the retracement that I'd need for a run up in here. So I decided to take a trade within this range here, and also used a stop within this range somewhere around here. So the market was able to go up and give me over like 50 pips for this day. So this was a Monday, and then within this range I expected some measure like a retrace back into the range, but because as I told you, the mental barriers that you also have as you trade. Remember, like I was looking for the actual trend of like bullish prices. So what I saw, we had here this daily bearish order block, and the market had taken out a lot of buy side liquidity within this range. Just because the market was bullish, I was like, I saw this setup, and then I was like, I shouldn't be trading against the order flow, you know, because like I didn't know what the market was likely to do within this range. I didn't know that it would trace back deep down into this range, you know, because like I didn't like take a clear look of what the market had done the previous days, and also what I was expecting within the previous days like to happen. Because like on Monday, after the market took out this buy side liquidity, I was expecting the market to trace back into the range. I expected it to drop, and also on Tuesday I expected that dropped, but I didn't expect it to be like this deep, you know. So I didn't take a trade in here. So what I did, I waited the market. Once it retraced back into this range, that's where I was looking in for longs. So as you can see, I took a long sum around here. So just because I used a tight stop, the market took me out, because like the ideal stop within this range was supposed to be below this low here, this low that was created on Monday. But just because it was kind of like I was so sure of the trend, so I decided to take in a long here, of which I was taken out. So as I was taken out, I still took in another long within this range. I was still taken out. So after I was taken out, I was done for the day. Okay, I ended up the day with a loss. This was on Tuesday. Yet like if I executed on this trade, this short here, like I would have, like Tuesday would have been a good day. So on Wednesday, let me check here. Yeah, on Wednesday I was still looking for what I was looking for on Tuesday. Remember, I was looking for bullish prices. See, we are on the daily bullish order block. We can see what the market did. So I was kind of like looking for bullish prices. What I waited for, I waited the market to take out the previous day's low, and then once I got a shift in market structure and run above this short-term high on a retracement, that's when I started taking in longs. You can see I took a long somewhere around here, and I took a long somewhere around here. So as the market went up, it went up within this range, so I decided to take off one single trade, and I remained with one trade. So later on, once the market retraced back into this range, that was around New York Open, I took in another trade that I had cancelled up here. So once the market went up, I took a partial from here and I took off the final trade from here. Okay, so that was Wednesday. So Wednesday was also profitable, but as you can see, I took another trade on Thursday. Yes, so on Thursday I also took a trade within this range. Now what I was looking out for, now within this range we have this 1 hour fair value gap, and at the same time we have this 1 hour bullish order block. So what I was looking out for, we had a short-term high here on the 30 minutes. As you can see, here's the high, here's the high here on the 30 minutes. So once the market like shifted in here, I just went in long somewhere around here, and my stop was somewhere around here. And once the market just continued and pushed higher within this range, when it retraced back in within here, I placed in another long. So what the market did, I was looking for the market like to run up this high. I was mainly waiting for a run to this low level. This was my draw on liquidity. So what the market did, when it ran up within this range here, like I adjusted my stop loss. Sorry, like when it ran up in here, I took off one trade from this range in here, and then on another trade I adjusted the stop loss. So what the market did, it just like retraced back within this range, and like it was ranging within this range here. It took me out at break even on one trade and then pushed higher. So what I decided, I took in another trade within this range again. I took in another trade. So just because I knew that the day like after this we had NFP, I was like, this market was going to smash me out. So like as I told you, like we all have mental barriers, like we make trading errors. So the bad thing, the most poor thing that I did in my trading is that I took a trade within this range. I took a trade somewhere around here. The stop loss was somewhere around here. So just because of how the market was playing within this range, price dropping and then moving, like it was like playing a lot within this range, you know, I was like, this market was likely to take me out. So what I did, I took off the trade from here. I took it off from here, and just imagine, just guess what happened after I took off the trade. So after immediately I took off the trade from here, the market exploded to the upside. It just continued pushing high, of which I couldn't do anything because I had taken off the trade already. So like that's more of what I had for the week. I woke up like the week was profitable. As I told you, the account was kind of like on $15, but before recording this, before I traded this week, I was in a drawdown, so I managed to recoup that drawdown and also made like a profit of something like a $7.7, of which I withdrew that profits.